Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is 10:30 a.m. in the United Arab Emirates, and that puts it pretty early morning in London at 6:30 and 2:30 in Singapore, for whatever relevance that is. But nonetheless, that's the time in Singapore. So get back to your office if you're out to lunch at Singapore. The Brent crude oil price is above $68 a barrel. When we did our Global Energy Outlook Forum only a few weeks ago, nobody was forecasting that number. Everybody was more or less at 60 on Brent for average for the year. Of course, we've 11 months to go, but nonetheless, most were calling below 60 on the average, and indeed it may still turn out that way. But surprise nonetheless that here we are at $68 a barrel on Brent just this morning, up about a little under 1%. And clearly there's a lot going on and giving that extra little bit of sort of momentum. Let's kick off this morning with Ahmed Mehdi, MD, Renaissance Energy Advisors and Senior Fellow at the Oxford Institute of Energy Studies. Ahmed, your thoughts on the sort of structure and dynamic of the market. Is everything moving up now on the fear of what may happen in Iran?
Good morning, Sean. Yeah, I mean, obviously, there's been, 2026 started with, geopolitics in the backdrop. Uh, I think that partly it's also related to a few dynamics that's keeping the floor price intact. So one is to do, I mean, from the financial side is to do with, we started the year with, quite a lot of short positioning. And so we've been seeing some profit taking happening in the market. But also from a fundamentals view, I think that there's been a sort of recalibration of S&D balances. I think the oil glut narrative is beginning to fade away a little bit as people begin to revise their demand expectations for this year, and I probably expect there to be a narrowing of the views, which up to a few months ago was as wide as between one to up to 4 million barrels a day in terms of what the imbalance would look like. So I think I probably expect that to narrow down towards a view that this year we'll be seeing slight revisions to the IEA's view on demand, but also yes, I mean geopolitics is playing a bit of a role, and the movements of U.S. military to the Middle East, and obviously the fact that we are in a world where actually Chinese stockpiling is also being assumed to continue throughout the year, which is also helping support the price.
Let's go to Asif Shuja, Director at Geopoke Consult here in the UAE. Asif, give us your sense about where things are at. Again, the immediate sense you can nearly see out our window, wherever your window might be here in Dubai, that the buildup of the U.S. Armada, which is always here, as it turns out. I mean, it's not a new idea, a little bit bolstered up at the moment, but the scale of the U.S. military presence in the Gulf is long standing. Certain moments it pops up a little more than others. But what's your read of the current situation? We had the Saudi Arabian government overnight joining the UAE government, which published 24 hours earlier that they wouldn't be allowing their airspace or land space or sea space to be used for an attack on Iran. How close are we to that outcome, do you think?
Thank you, Sean, for having me. I see that we are apparently closer to that, D-Day. Every indication is towards that. And Mr. Donald Trump has been hell-bent to actually resolve this solution in the way he thinks is the best outcome. So the army or military is there. It's all, has been shored up in this particular region. And what you have just mentioned about Saudi Arabia, I think this is the most direct indication of what is going to happen there. Underneath, as Donald Trump has also said that there are talks, or maybe the request of talks from the Iranian side, we can safely assume that there has been such, invitations for talk from the Iranian side. I assume that could also be the direct talk. But the way the dynamics play between United States and Israel, I don't think that unless the ultimate outcome is favorable to these two parties, they would be indulging in talk. So the military presence is there. We may see them in action. This is what I see.
Do you think, just to clarify on your position, I mean, obviously, this is not new, and we obviously saw events quite dramatically escalate to full engagement last June. Is this occasion different or just another episode? Is this, from the Iranian regime's point of view, an existential, this is the knockout punch coming now? Or how do you perceive it from a relative point of view, contextual to what we saw last June?
I don't see this what is about to come as episodic. This might be the ultimate thing that is about to happen. Although we are not really comfortable with those scenarios which will be unfolding after this event, actually happens. But the last actions of Mr. Donald Trump, if we try to have some cue from those, actions, they are pretty bold, right? So in those terms, and I think the way every indication shows that Iran is at the weakest, the regime is at the weakest, lowest ebb. The populace there is sort of, extremely discontent. All those processions that we have seen, even if they might probably be, aided by the external factors, but the optics of that is very much clear. So far, there is only one thing that may suggest something of a different outcome is that the position of the Shah, who has been in exile in the United States so far, and I think we should look at that particular point, what kind of agreement, if any, United States president might be having with him. He has not yet been incorporated in the whole scheme of things. So this is one odd, event which is not suggesting towards the ultimate outcome here.
Well, I
But the
suppose
moment
that's ultimately the big concern of the neighborhood. I mean, you mentioned the Shah's son who's sitting on the beach in LA for the last 40 years, but whether the outcome the day after ends up being a very fractured neighborhood, I mean, like we saw the terrible events of Iraq 20 years ago, everything splinters into 50 parts, and who knows what happens from there. We ended up getting ISIS out of the splintering and demolition of Iraq and Syria. So once you push over the domino, you never know. James Lear, International Relations Manager at Gulf Mercantile Exchange, of course, the oil exchange here in Dubai. How do you assess the current balance in Middle East crude markets, James? Are we seeing any of this sort of geopolitical stress reflect in the market? What signals are you watching most closely now?
Yes, morning, Sean. Yeah, it's interesting. I mean, speaking to the traders, the oil traders around the region, they're sticking to the old adage, buy rumors, sell facts. And at the moment, they're keeping the eye on the rumors, but they're more inclined to keep the major eye on the facts. And the facts are that there is moderate oversupply in the market, and people are looking at the downside more than the upside at the moment, with an eye on USS Abraham Lincoln coming into the Gulf. I'm interested in the spreads between the grades, which tells its own story. I mean, when I spoke to you last 6 months ago, we saw Oman and the medium sour crudes of the region trading at a premium to the Brent by about $3. And even at one point, I think Brent Oman at $3 premium to Oman, and Murban at a $3 premium, almost trading cent for cent. Now, clearly, anyone with any trading experience would see a few red flags there. And we've seen this correct over the last 6 months. We're now trading at a Brent premium to Oman of over $2, maybe $2.50, and a Murban back to parity. So it's clear that there's an increase in supply of medium sour onto the market after the production unwinding by OPEC. The overall price has held in, and I think that's because of the geopolitical, the rumors, basically. But if this time passes and we get away with this without any military action or some sort of diplomatic answer, then the genuine feeling is that we're overpriced here.
Ahmed, I wanted to get your views. You mentioned there China in your opening comments there as reasons why this market is supported. The China's continued buying of excess crude for stockpiling. We have Reuters reporting overnight that the surplus, China's surplus crude oil jumped to over 2.6 million barrels per day in December, up from 1.88 million barrels per day in November. I mean, they're bumper numbers for excess. That's per day, right? That's like 50 million barrels a month going into inventories. Your thoughts? Obviously, the average for the year was much less than that, 1.1, according to Reuters. But the scale of this demand in terms of it being for storage, the definition of that being, is it strategic storage, a bit like the US, which is the SPR? You kind of don't really consider it from the point of view of the current front month flat price for oil markets. The Chinese one was always kind of considered they're buying as part of the impact on the front month. But does one look at these stockpiles in China and see them as more strategic, a bit like the SPR in the US, or are they more market focused, could be pulled back in any time? Your thoughts on the
Yeah,
definitions here?
sure. So I think that well, despite the big stories of last year about stockpiling, stockpiling has always been around. Particularly we saw during COVID. We've seen the Chinese. I mean, the real numbers are difficult to discern, but the amount of tanks in terms of construction for last year increased, and also companies were given mandates to build new tank farms in order to actually have a mandate for stockpiling efforts. But also, there is an element of what's the difference between this year and last year in terms of government policy around quota issuance as well. Last year, we saw a big front-loading effect where all the quotas were issued towards the independent refiners in the very beginning of the year. This year, it was slightly different. But fundamentally, it comes down to where the price is. Is the price right to allow for that stockpiling effort to continue? But also, I think since Venezuela, there's also, we see a US policy there to actively deprive those sanctioned crude to China.
But
And that,
just on the point of
yeah,
definition, which I think is important from the point of view of perceived supply into the
sure.
market, Chinese inventory build, which is a bit more than normal in the last year, whatever the nominal number is. It appears to be a significant increase in what it was previously. But from a definition point of view, do you think that matters how the market perceives it, whether it's perceived as available supply for current use?
Yeah, so the way I would define it is that, or the way I would look at the relationship is that when we are talking about inventory or stock build, included in that assessment has typically been oil on water or oil on transit, and also the inventory globally has went up last year, but the distribution of where that is and whether or not it would be visible to traders and whether it would have an impact on the spreads is actually why people have said this is why it's not translating into an impact on price. Because the argument was always last year that oil on water would eventually, once the structure changed, translate into oil on land. And that would then translate into higher OECD stocks and obviously in the US. But the realization I think has come is that a lot of that oil and water, number one, is sanctioned, and number two, as long as we are in this kind of geopolitical climate, that the efforts to continue stockpiling will continue from China. So
And
you're
from
right.
you,
It
you would
won't.
think others as well. I mean, ultimately, your opening comment, about the idea that this surplus that was just about to come, always coming over the horizon last year, the finally that surplus is not over any horizon. It's locked in a box in China and only break the glass when absolutely necessary, which then reflects actually this is a tighter market than was previously defined
I,
because that oil is locked
I,
in a
I,
box.
I mean, I would say it's not tight, the market. It's just that the expectations are like to change. And I think just
Yes.
one point about what James said, it is true that, since we started the year, Dubai started flirting with contango. We also saw some temporary events like the Kazakhstan issues, which had an impact on Brent Dubai. But naturally, there is certainly, but I think the key point here is that we are in a seasonally weaker demand window.
Yeah, seasonally weaker demand window and prices are still $68 a barrel. Asif, I wanted to get your thoughts on these statements from the UAE and the Saudi government. Obviously, you sit here in the Gulf in Dubai. Over the last 2 days, as I mentioned earlier, the UAE and Saudi governments have stated that they would not facilitate any military use of their airspace, etc. The U.S. government or any foreign, or I presume. Does that make any difference to the capabilities of the United States to execute their whatever strategies they may be thinking of?
No, I don't think none at all, because United States capability is entirely independent of all these, countries who may be supporting. But the support that is, that Iran is defining, it also depends upon Iran's definition of these countries' support to the United States, because the military bases are already there in the present. Now, in this particular potential, military operation that United States might be running, then there, since whatever has been there in the past in terms of military armament in these Gulf countries, Iran might be defining it differently. So the statement of Iran is very much important in terms of, warning these countries that their support to the United States will be considered as a direct attack or attack on Iran. So there is some
Because
fine
of course,
line there.
Qatar and Bahrain have no choice because they actually host U.S. bases.
Yes, of course. And these statements are basically meant to indicate towards those, military bases, right? But, so far as the broader picture is concerned, I do not think that this time, as I said, the final military assault may not be of a nature where Iran may have much of a leeway in terms of, counterattacks. This is what I perceive so far as I think. In that term, so there could be, I mean, it's again a scenario building. United States might be having some kind of alternate arrangement within Iranian regime. As I said earlier, that he is not be having any conversation with the Shah of Iran. So within the insiders, that is IRGC or any fraction that could be supportive to United States. In fact, this has been a long game. So the point, if that point actually they reach up to that point where they see that they kind of alternative arrangement could be made, then they can go for that assault. As soon as the primary leadership is displaced, then the alternative leadership could take place. I think this
Well,
could
it's
be
like
a
what
modus
happened in
operandi.
Venezuela, right? They just took out two people. Can that model be repeated in Iran? It seems a bit more complicated there. James, to what extent are the geopolitical risks in this Middle East we're talking about being priced into the crude markets right now? What is your assessment? We're up over 10% this month. Is that all due to this saber rattling?
That's interesting, Sean, because I was at the lecture on Friday concerning this subject, and when the lecturer asked the audience, what did they think about? Did they think it was likely there would be military action in Iran? Nearly every hand went up. But when I speak to traders, and I don't think this is priced in at all. So I think there's a disconnect between people at the coalface of the markets and those basically civilians who seem to have a more sort of pessimistic view, if you like, about what's going to happen. Clearly, the markets are keeping their eye on this, but
I mean, there was quite often, and we did surveys at the beginning of the month here that was sort of agnostic to the idea, regardless of geopolitical saber rattling. This is a market that has been uninterested most of 2025, except brief moments of real drama. There was a spike, but nonetheless, oil market uninterested in geopolitical tensions. This would appear up over 10% in January. This is a market that is concerned, that is interested in what the geopolitics are telling the tea leaves, if you like.
Yeah, I mean, we can certainly see. You can certainly say, well, the 10% increase this month is all eyes on Iran. But historically, there's been much more volatile upward moves for any kind of rumors about action in the Middle East. I mean, we need to get it in perspective. In recent times, sure, 10% does seem like quite a reaction. But if you look back in many different, even back to the start of the Ukraine-Russian war, we saw much more of a reaction from the markets than this. I still think the market, or in general, the traders are banking on this not escalating. And the increase you've seen is about enough for them at the moment. I don't think anyone's rushing in to buy any more at these levels. And I think from a political point of view, I'm not sure the Americans want to get involved in any kind of regime change in Iran at the moment. I think you're probably on the button when you said, is it possible they take out a couple of key players? That's possible. But any kind of boots on the ground, I don't think that looks very likely, thankfully.
Well, let's go to the survey question, which is tackling some of these issues that we mentioned earlier, but looking more at the inventory in China question. China's surplus of crude oil averaged at 1.1 million barrels per day for the last 2 years, according to Reuters, in 2024 and 2025. That adds up over 2 years to be 800 million barrels of oil that they've, that's been surplus as defined, i.e. not consumed by any sort of identified measure, which at 800 million over 2-year build is double what the US has in their strategic petroleum reserve at the moment. In the US, it's about 400 million. And this is only over 2 years, the China build. But my question is about 26. With Brent price forecast in the 60s, do you expect China to have a similar build of 1 million barrels per day, closer to 1.5? No, the opposite, under 1, or 500 even, or less, 500,000 barrels a day. What's your thoughts and sentiment, do you think, for China oil build as we go forward here into the coming months? Ahmed, just looking at the question there of the price build into this year, how much this, 10% plus on Brent might seem like a lot, but it's not a lot when you think of it in gold, or you think of it in silver, or you think of it in dollar decline. All the other markets, the S&P banging its head against a new ceiling every day. Is this oil just catching up with the wider sort of mood in the markets?
It's a good question. You're right. The relationship between, what came into the lens of focus was relationship between oil and gold, oil and equities. I think that realistically, once we begin to look at a few issues, one is to do with, paper markets versus physical markets. I think physical markets are, in certain pockets showing some weakness. And that's clear, but it's not perhaps the severe weakness that has been forecast now for many months. Freight is also an interesting part of the market right now with, and also arbitrage flows as well. So freight, when you add in what's happening between East-West spreads is also keeping barrels locked in as well, and sanctioned barrels also, with India showing quite a lot of pivoting in recent weeks in terms of their forward purchasing, not only for the year, but also slight shift away from Russian crude. And that's leaving quite a lot of Russian crudes hanging around. So China has a bit more optionality now in the market, after Venezuela. So there's a lot going on in the sanctioned market and also in the non-sanctioned market. In terms of your question about, is this going to drive? I think, as James said, if we do begin to see a sort of taco moment for Iran, I think you will see a little bit of retreat. And also, there have been some temporary disruptions which have caused a bit of an elevated increase. So, for example, the US weather issues, Kazakhstan, SPM outage, the drone strikes. So again, structurally, I don't think people are changing their view necessarily that we are still in the first half of the year in an oversupplied market. In terms of what curveballs are ahead, absolutely. The other thing I would mention is that refining margins are also looking relatively okay, particularly with uptick in naphtha cracks and also gasoline after the EU ban. So all in, I mean, in terms of where I think the complexities now, depending upon where you sit in the oil value chain, the interesting side right now is in Asia around how refiners begin to look at grades, look at optimizing the freight volatility and also pricing relationships, particularly with quite a few trade flow shifts in the last few weeks.
Asif, just on Asia outlook, and again in the sort of wider geopolitical space, of course, we had a significant announcement in India yesterday, a trade agreement between India and the European Union. India, the fastest growing large economy in the world, and of course, European Union, a massive market. How significant? I mean, that's optimistic. That's trade. That's more GDP, more demand for energy. Is that in the elevating space of helping inflate this oil price? Your thoughts of that as a decision, a significant one, and where it feeds into sort of general GDP and trade?
Well, yeah, this announcement is extremely important, but we have to see, which was more proactive actor in this kind of, agreement. I see that it's been European Union, Europe, which has been more interested in this kind of trade agreement because their relationship with the United States has been soaring, right? And even this, oil built up on the seas, the oil coming up from Russia, they are being halted on the seas. These are to create kind of positive sentiment in terms of India's relationship with the European Union, right? So these have all really.
So now India has an incentive, an extra incentive here, not to take more Russian oil. This deal with Europe is helping them move away from Russian imports.
That's a temporary measure, so far as I can see, because see, you cannot simply stop somebody from taking energy, which is so vital for the growth. Even it is specifically because of their growth, which is why they are going to have an agreement with India, right? So that growth would be stunted if there is no energy. Now, see, in energy market, it's not always the state which actually plays a primary role, but these are the private players. But of course, these are all guided by the sentiments which has been created by the state. So this is a temporary phenomena, but eventually, United States is coming up with big chunk of oil in its own way, which will actually be, providing for the needs of these countries like India. In fact, China, so far as I can see, of course, in accordance to their own terms. So these will not be a trouble. But I think so far as Europe's agreement with India is concerned, it should be seen from the dynamics of Europe's relationship with the United States. I think that factor is important, significant.
Of course. I mean, it is, when it gets signed in the middle of a moment like this, it sort of has big resonance of fracture with Europe and America. But of course, as the headlines told us, this is a trade agreement that took 20 years to negotiate. So my goodness, it just seems coincidental that it's coming out this week. Similar to last year is the majority in this room. Seems about right to me. Always safe to say, oh yeah, the same as it was. But James, when we talk about market developments, we've talked there about the factors over the last half hour together, what might be contributing to this upward inflation in the oil price this month. But what about what is underpriced, what isn't being considered in the market developments? What do you think are the most underpriced of those in the markets today?
Well, I mean, looking at oil in general, I mean, we saw Nasser, head of Aramco, at the Davos last week, saying like the oversupply is wildly exaggerated. Is it? I could see a rise in. Well, the point is, if the Chinese continue to stockpile, then that's the case, right? If they continue to see a problem with Iran, with strategic problems there, they're going to continue stockpiling. If they continue stockpiling, the price will hold in. If it doesn't, then we could see a correction on the downside. Now, what we're looking for in the future, where's oil going to go in the next, beyond this year, Sean? Well, we've seen a lot of underinvestment in discovery in the last year or so, right? So we've seen shale production decrease. So we could see, and we don't know where Chinese demand is going. I can tell you from the exchange point of view, we've had a very large deliveries from February loading and March loading, so December and January trading. So there's plenty of demand out there. And if that continues from a Chinese perspective, and we see the fall off in shale and other factors, then who knows? We could be seeing crude trading between 70 and 80 within the
it's hard to see the Chinese stopping buying where they can at a time when there's a U.S. naval armada on the doorsteps of Venezuela. It's one of its former suppliers to China, the world's biggest reservoir of oil, and now in the Gulf, notably Iran, but ultimately the Gulf, the U.S. Armada signaling quite firmly the ability, at the very least, to put Iran back in a headlock in terms of its oil exports, as it did during the first Trump administration. If you're China, I don't think you're buying any less oil at the moment or for the foreseeable future. It seems to me hard to make a case why China would stop 2 years of a clear trend of building 1 million barrels of oil into storage every day. Hard to make an argument that why that reverses, particularly under these current moments. At least that's my last penny's worth as we go over time here. James Lear, thank you so much. Really appreciate your time. Ahmed Mehdi, thank you as always, getting up early in London. Asif Shuja as well here in Dubai. And hope to see everybody in London at the IE Week. Ahmed will be there to greet us all as we get off the plane at Heathrow. And we'll have a good few days together. All right, guys.
Thank
have
you.
a great
Thank
week.
you.
All the best.
Thanks, Sean.
Bye-bye.
Thanks, guys.
See you. Bye-bye.